Okay, what about now? Can anybody hear us or see us? We're going to have to hit the reset button and start all over, I think. Let's see. Can he see us now?
Let's see. Okay, he just said, there we go. I think we're on.
Wow, I don't know what happened there. For those that are just joining us,
Okay, he just said, there we go.
yeah, it's working now because I'm getting. I don't know what happened. I hit the broadcast deal again, and that time it popped up. So we may have to recap some of the stuff that was said. Um, we were talking about Matt's. We're going to be there. Me and Trucker CFO both are. On Friday at 1 p.m., he's going to be, or we're going to be giving out T-shirts, and then on Saturday at, I believe you said, did you say 10:30?
Saturday, 10:30, I will be at the SiriusXM booth, up on stage, part of the radio show there. And I'll also have shirts that will be given away. I've got some postcards that can be used to just as a reminder of where to access our tax guide, as well as how to get to our website. So there's gonna be a lot of good information there. Can meet the folks, say hi, answer questions. And then, as you mentioned, Friday at 1 o'clock Eastern, we're going to be meeting out there near the entrance. More information on specifically where to come. But Todd and I will be together and handing out shirts. These are all free shirts. They're going to be Trucker CFO shirts. And again, answering questions, doing whatever we can get done in that period of time.
We also have Robert Hazen in the comments. He's an IRS agent, and so he'll be here for
I'm sure he just got a good laugh at that too. He is he's not an IRS agent. He is an IRS enrolled agent. Let me just talk a little bit about what that means, because that can be kind of confusing.
Okay.
Robert Hazen works for Trucker CFO, and an enrolled agent is a certification that you can get with the IRS that allows you to represent people in front of the IRS. So he can work with folks on tax problem resolution. There's a lot of things he can do, similar to what a CPA can do, and similar to what attorneys can do. And there are differences between the two. For example, I'm a CPA. I can also practice in front of the IRS representing clients. And there are things that we can and can't do in comparison to like what attorneys can and can't do. So just a little bit about Rob. He's great. He's going to be able to answer a lot of questions if folks do have questions while we are on this call live. But he is not an IRS agent, so don't feel too scared about asking him any questions.
So this isn't. I can't like turn in my enemies to him for
Right.
audits or nothing like that.
He along with myself and others at the Trucker CFO team are here to make sure you stay out of trouble, not
Ah,
to try and get you in trouble.
so trolls are safe another week. I can't introduce them to Robert for revenge.
Right.
But that segment that Trucker CFO does on Saturdays is called "Driving Your Dollars," and the last one they send out an email, and I watched it through that. Which, even though I'm a serious subscriber, that's the best way. I like to watch it because I can hop right in. And I learned something that's kind of embarrassing. I learned what a KPI is, and I know later in my questions we're gonna get into what that is. But they covered a lot of stuff, and so I've got about 4 pages of questions here. But the cool thing about this that I think that we hadn't really tapped into on this show yet is investments and financial planning and stuff like that. And I don't know if people realize that Trucker CFO can offer you some advice on that kind of stuff too. And so one thing I learned that was pretty interesting, IRS audits, about 0.6% of people get audited. And one of the questions that comes up a lot is are owner operators more likely to be audited than, say, the general public?
Yeah. And the answer to that is yes, but not because you're owner operators. You're more likely to be audited because the IRS audits at a higher percentage small businesses. And there's a number of reasons for that. Some of it is is just kind of the statistics of how the IRS system picks folks to be audited. Other parts of it are just the nature of your tax returns results in more red flags, more things that are going on that will cause you to be audited. But that number is at about 2.4% of small business owners will be audited compared to the 0.6% of the overall population. So to give you an idea, that's roughly 2.5 people out of every 100. 2.5 owner operators out of every 100 owner operators will be audited. And so to talk a little bit more about that, really since the couple of years leading up to COVID and then definitely through COVID, the IRS auditing program was basically non-existent. They have what they call enforced compliance. Enforced compliance simply means that the IRS looks at different aspects of your tax return, and they will then come out and audit you or do other things, letters, levies. They can do a number of things to essentially force you into compliance with the IRS. And those enforced compliance initiatives with the IRS essentially dried up, especially through COVID. What we are seeing is that since we've kind of come out the back ends of the pandemic and the IRS has started to somewhat get their act back together, and also they've received $85 billion through the Inflation Reduction Act, and they have more money, they are going to start using that money and have started to use that money. And so audits are on the increase. We actually have examples of clients who filed 2021 tax returns have already received audit letters for various reasons. Also, we have seen an increase or uptick in clients who have not filed tax returns. And those will go back many years, and the IRS will do what's called or file what's called an SFR, which is a substitute for return. It's another way of this enforced compliance. And so what a substitute for return is, and I think we may have talked about this in one of our prior shows, I don't remember, but a substitute for return is they'll take a 1099, for example, Swift 1099. Maybe that 1099 is for, say, around $200,000. And the IRS will assume that that is all income, that $200,000 went directly to your pockets. They don't take into account the fact that you bought fuel, that you have a lease payment, that you have insurance, and all these other deductions. And so you're going to get a letter from the IRS stating that you're now being taxed on $200,000, and you're going to show a nice little $60,000 tax bill or so. And so we've had people calling us up with that, and that's a little bit scary when you get a letter saying that you owe the IRS $60,000 that you weren't planning for. So all that's just to say there's a lot of stuff the IRS is doing and will continue to do more of now that they've got this $85 billion and we are on the backside of the pandemic.
Okay, we've got some questions we got to jump into before we get back to mine. Marcus wants to know if you sell your services in packages or just general services.
We do a little bit of both. So there are packages that you can sign up for that's going to more or less match your weekly settlement process. Depending on the motor carrier that you're with, we may be able to settlement deduct that. We may not. We also may be able to get your settlement information directly from the motor carrier. Other times we are not. It's just, again, going to depend on the motor carrier. I will say more and more motor carriers are doing less of that because of different legal issues surrounding contractor classification issues, AB5 out of California, those types of things. So we're seeing less of it. But either way, it's not a problem. You can sign up for that weekly package. We've got a variety of different packages that have different levels of service, from accounting and bookkeeping to including or not including your tax return. It may be that you have a business tax return for, say, a partnership or S corporation, different packages that will or will not include those tax returns as part of the package. And then you can also pay for things through just like an a la carte type offering. So if you just want to say you didn't file your tax return back in 2018 and you're concerned about the IRS doing this SFR, give us a call. We'll get that 2018 tax return prepared for you. We'll bill a one-time service for that 2018 tax return. So there's a number of options, and it's going to really depend on what your situation is, what what kind of driver you are, whether you lease or own, or maybe you neither. And you're just driving somebody else's truck. We've kind of got products and services and packages that encompass all of those different types of situations.
Okay, and I just put the ticker up that's got the phone number if you want to contact Trucker CFO for more information or you've got specific questions you want to ask. Here's another one that's coming through, and then we'll jump back into these others in a minute. He just opened his single member LLC out of Nevada with Zen. They keep sending him emails saying he has to file quarterly taxes and the deadline is approaching. Does he have to file?
Okay. The easy answer to this is yes. And let me clarify that. You don't file anything. Okay. There's not a tax return that has to be filed for quarterly tax purposes. What it is you do have to pay estimated taxes depending on the level of income you have during the year. So there are 4 times during the year that the IRS and generally the states match the IRS. So 4 times a year that you need to pay those quarterly taxes. The nice thing about our services is if you are on one of our accounting packages, it's going to include a quarterly tax estimates. And so we are going to tell you based on your actual income to this point in the year, how much we think you should pay. That is much different than what many other CPAs, even accounting services that specialize in truckers, they don't do it this way. We are doing it based on your actual results for this year. Most other CPAs, what they are going to do is they're going to provide you with a voucher that essentially takes a percentage of your tax liability from the prior year and divides it by 4. And that's an okay way of doing it. It's going to keep you compliant with the IRS, but it's not the most accurate way of doing it. And we want to be accurate. We want to make sure that when we prepare your tax return, this time next year, we're as close to that actual amount of tax liability that shows up on that tax return as possible. And if you base it off of last year, you may end up overpaying, you may end up underpaying. There's a lot of different things that can happen, and we don't want that. So to answer his question, yes, you need to pay quarterly taxes. No, it's not a filing. We help you with that process. And what else can I add to that? The dates. It's 4 times a year, but it's not every 3 months. This is a little bit confusing. So the first quarter estimated taxes do match your annual filing for the prior year. So that's going to be April 18th of this year is the first quarter estimated tax filing deadline. Then it is going to be June, which is 2 months later. After that, it's going to be September, which is 3 months later. And then it's going to be the following January, which is 4 months later. The reason the IRS does this is not a very good one. It essentially goes back to, I want to say it was the 1930s or 40s. The federal government was trying to come up with a way to get an increase to their cash inflow from the tax filings. And so they shifted one of the dates, and that resulted in kind of this staggered dates that we have, and they've never gone back and changed it. So just remember, it's anywhere from 2 months to 4 months that you need to file or pay your estimated taxes.
Okay. Thank you, Adrianez Sanchez Gomez, for the contribution. I haven't made any income on my single member LLC. It didn't let me add that to my last message. So the question then would turn into, does he have to do it if he hasn't made any income?
If you haven't made any income, you do not need to pay estimated taxes on that LLC. If you got other stuff going on, you may need to pay some estimated taxes on some of the other stuff, but not on that LLC. And it's important to remember that business income for sole proprietors, single member LLCs, partnerships, and S corporations. Those are all pass-through entities. What that means is your business does, in and of itself, does not generate a tax liability. So you're not going to pay taxes at the business level. The income from those business entities all flows through or passes through to you as an individual, and that's where you generate the tax liability. And so when you pay quarterly taxes, you are paying it as an individual on your social security number, because that's where the general liability is going to accrue, is at your social security number level.
Okay. Hello, Freedom and Ambitious. OTR Vic wants to know, is it too late this year to change your LLC to an S-corp?
It is too late to make a timely filing of S corporation status. That deadline was back on March 15th. And so you cannot make a timely filing. You can petition the IRS through a very specific process that we are very familiar with and do on a regular basis. You can petition the IRS to allow you to make a retroactive application for S corporation status. It's different than when you make a timely filing, and there is very specific language and very specific pieces of information that you need to have in that application. But as long as you are doing certain things that are required of an S corporation, we can make that retroactive S corp election, and we have a very high percentage of success when it comes to those retroactive S corp elections.
Okay. F8. Thank you, F8. I appreciate that. Here's another one for you. How many settlements do you need to come up with an accurate estimate?
It's really a question of statistics, right? The more settlements we have, the more accurate we're going to be. So if you're wanting an estimate for Q1, first quarter, which is going to be through the month of March and is due April 18th, if you want us to have an accurate number, we need all of your settlements from January through March. As we also need all of your other out-of-pocket expenses, and we need to have the bookkeeping done on that. So if we have anything less than that full quarter, our estimate is going to be inaccurate by the amount of whatever is missing.
Okay. Hey, Kurt, thanks for joining us. I've got a question circling back around to audits. I know you had said before that typically the IRS goes back 3 years on an audit, but they could go further in certain circumstances. Is that so? Do we really need to keep our receipts and things for about 10 years?
So if you're doing the things you're supposed to, I would say, generally speaking, you just need to keep them for 3 years. But what happens is when they audit you, and there's a lot of nuances to this, and I won't get into all of the nuances because it can get very complicated and complex, and probably doesn't make for a very good show. That being said, generally speaking, it's 3 years. And if when they are auditing you on one of those 3 years, they find an issue, they can then go open up a year prior and a year prior and a year prior, all the way back as much as 10 years. So it's not like you're going to get a letter today saying, hey, we're auditing you for 2013. What will happen is you'll get a letter saying, hey, we're auditing you for 2020. And in that audit, they may find an issue and then open up 2019. So if, like I say, if you've been timely filing your tax returns, you've been doing things the way you're supposed to, you're reasonably confident that you're not going to end up with issues and misclassifications of revenue and expenses, then you don't really need to worry too much about them going back much further than the 3 years. But it can happen.
So how does this generally work? Does it generally all happen through mail? Do you have to travel to a city and do your audit there? Do they come to your house like you see in the movies? How does that, where does an audit take place usually?
They're generally not going to show up on your doorstep with guns drawn. I promise that doesn't really happen. If it gets to that point, there's a lot of other things that have happened beforehand. Or if it gets to that point, it's because the IRS has been pulled in by the FBI or ATF or other institutions regarding criminal activity. And generally with criminal activity, there's other types of tax issues that come along with that. So generally speaking, for the for the general public, it's going to start with a letter, and that letter is going to notify you that you're being audited and what type of audit it is. Now, that could be a mail correspondence audit, meaning they're just going to ask you for specific information about a specific part of your tax return. Maybe it's per diem. Hey, provide us the information related to your per diem deduction on this line of Schedule C and send that in to us, and we're just going to review it. And that may be the extent of it. It could be that they say, hey, we want you to appear at this IRS location on this date, bring all of your documentation, and we're going to go through it. That's another way that can happen. And it can also be that they will say, hey, we would like to come to your location, or the location of your books, the bookkeeping. So it's generally one of those three. And then if it gets into much more detail than that, and if they find fraud going on with your tax return, that's when you're going to end up with situations where perhaps the IRS police get involved and they're coming to take assets.
So who determines who gets audited? Is it all automated and computer done, or is there numbers crunchers and people going through books and saying, all right, we're going to look at this guy? Is it all computerized, or how does it happen?
It's a little bit of both. And I will say most audits are going to be the result of a computer generated kind of score or flag that takes place where they just say, hey, there's something a little wacky. Maybe wacky is the wrong term. There's something a little bit out of the ordinary going on with this particular account within your tax return. And it can have, as an example, a new owner operator, somebody that's been W-2 for years, right? They've worked a W-2 job, whether it's in trucking or not, for years. And then all of a sudden they become an owner operator or independent contractor, and they've got a 1099, again, from Swift for $200,000. And prior to that, they've only ever had a W-2 for, say, $70,000. Okay. That jump in revenue is going to, it's going to throw that IRS computer a little bit, not throw the computer out of whack, but it's going to flag the computer. They're going to be like, hey, this taxpayer just went from making $70,000 to gross revenue of $200,000. What's going on? And it may result in, increased scrutiny. Now, don't let that scare people away from becoming an independent contractor or owner operator. It's just part of the business. And again, I always tell people, if you're doing what you're supposed to and you're paying your taxes and filing your taxes correctly, there's nothing to worry about in audit. It's when you're not doing the things you're supposed to or not filing that you need to worry. So don't not take steps to improve your life or live your dream just simply because you're worried about the IRS auditing you. That's not a good reason. So these scores, these things that happen with your income can be reasons. And then so that's the computer side of it. Another thing that can happen is there may be something that causes your return to be selected for a little bit increased scrutiny. It may be something that you don't even know about, right? You never get a letter on. The computer tells an IRS employee, take a look at this return, and they may review it. And if that employee then determines that they want further information, it can result in you getting a letter for audit. So there's things like that happen all the time. Another one that happens, which is a little bit less likely, especially in our for our listeners, is there can be a situation where somebody that you may be associated with at a business level that gets selected for audits themselves. And because of maybe business transactions or other things going on between your business and their business, it can result in your business being audited as well. So there's things like that happen.
Here's one more. I've been getting a lot of per diem questions lately. Can I use per diem rate if I'm a lease operator for Swift? Also, if I buy your service, would you guys calculate how much I need to pay in taxes that week so I can set the money aside?
Okay, so let's start with the first part. Can you use the per diem as a lease operator for Swift? Yes, you can. If you are filing taxes as a single member LLC, as a sole proprietor, or as a partnership, you get to take the per diem through your tax return at the $69 a day rate. And it's as simple usually as just providing us the number of days and partial days. We do that calculation as part of the tax return, and you get your deduction. For S corporations, it is a little bit different. If you are a greater than 2% owner of an S corporation, you do not get to take the per diem in the same way. With an S corporation, you become essentially a company driver of your own business entity. You have to take reasonable compensation. And as part of that reasonable compensation, you need to implement a per diem plan similar to if you went to drive as a company driver for anybody else, any other motor carrier that treats you as a company driver that has a per diem plan. If you're an S corporation, you need to have something very similar for your own operation, and you need to pay that as W-2 income as a reimbursement for that per diem rate. It shows up on your W-2 in box 14. It is non-taxable income. So it's essentially you being able to take an untaxed distribution out of your S corporation, and that's how you get to take the per diem for an S corporation. We help our clients with that are S corporations. There's a lot of misinformation. There's a lot of tax firms, including big ones, that are not doing this or handling this correctly. And we are seeing it, and definitely recommending that folks make sure they are doing it right. And there are also some things that you need to be doing with regards to medical expense, medical insurance premiums as an S corporation have to run through your per diem as well. And on those, they reduce your Social Security income. The nice thing about all of this, if you use our services and you're sitting there thinking, man, I didn't follow anything you just said, give us a call and we're going to handle it for you, right? That's why we're here. You just need to understand some of the basics. You need to understand what we're doing and why we're doing it for you. And at the end of the day, it's to save you money. But we're going to make sure that you stay on top of it and you're just doing the things that you need to do, and don't worry about feeling like you need to get a PhD in accounting or tax.
Yeah, as everybody knows, I just got my S-corp and LLC through Trucker CFO, and I'm going to have a lot of questions in the coming weeks about these things. But here's
There's
another question. Oh,
Sorry, real quick, and you don't need to bring it back up, but the other part of his question was, I believe, can we calculate his tax on a weekly basis? So we do have a process where we will help you understand how much you need to set aside. And part of that is tied in with the way we do our estimated tax calculation for you. And you can put it into a type of escrow account, a fund account, we call it, to where we can actually help you pay your taxes. You can do it on your side, but yes, we can help you understand how much you need to set aside each week so that you're covered when it comes time for those estimated taxes.
and Marcus wants to know, how do you pay your IRS taxes? Online, by mail?
You can do either or. What I will say about online is you got to be really, really careful when you go online to do this. One, there are scam sites that can trick you into thinking you're paying your taxes through the IRS, and people can lose money that way. So be really careful about which website you're going to. The best, most secure way to do it is through irs.gov. And that requires you to set up an IRS account. There are other third-party applications that I trust and that you can pay your taxes through. So aside from making sure you're on a legitimate site, the other thing that comes up is when folks try to do this on their own, they can oftentimes misapply the tax liability. So they may log in and go to try and pay their estimated taxes for third quarter, and instead they end up, I don't know, as an example, applying it to their 2290. Or they apply it to something else for their business. And that is very problematic, and it can get expensive for us to then fix. We are then in a situation where we're going to have to put a power of attorney in place. We're going to have to call the IRS, and we're going to have to work with them to reapply that payment in the correct place. So probably the safe, I don't know if safe is the right way. The most foolproof way of doing it is to just send a check with a voucher via mail. But I don't want to scare people away from doing it online either, because that's definitely the easiest way and the quickest way. And if you do it right and you know what you're doing, it's the best way.
All righty. Levi wants to know if he has to pay his taxes all at once or if they'll take payments.
All right. With the IRS, your tax liability is due at the deadline. So whether you have an extension or not, your taxes for 2022 are due April 18th of this year. If you are not able to pay in full by that time, you need to set up an installment agreement. We can help you with those installment agreements. It will result in a monthly payment that you can make over a period of time. That's just kind of generally speaking. There's a lot of situations that can also change the way we will do that for you. If you've got tax liability of over $50,000, we're going to work in some different ways with you because the IRS requires some different information. If you owe for multiple years and you continue to get behind, if you find yourself in a hardship, you've had something happen personally, and you just don't have the ability to pay, there's other things that we can do for you aside from the installment agreement. But just generally speaking, pay it by April 18th. If not, you need to get with us to get an installment agreement set up, because if you don't, you're going to continue to accrue penalties and interest related to that liability. Once we get the installment agreement in place, the penalties stop, the interest will be included as a part of that payment plan that gets set up.
All righty. Jack wants to know if you guys offer a tax guide. Is that PDF on your website?
Yeah. The Trucker CFO Guide to 2023 Tax Season. You can download that right from our website, truckercfo.com. It's right on the home page. Just click on it. You put in a little bit of information and it'll give you the free download.
Yeah, and it's really good. I went over it on this channel a couple of weeks ago, and it was really good. All right, let's get into personal finance. That's something else y'all covered in there. And you said that you should eliminate debt before you invest. That sounds like a good idea in case your investment doesn't pay off. And
Yeah.
you recommended using a snowball effect. Do you want to talk about what a snowball effect is?
Mm-hmm. So definitely eliminate the debt before you invest. Generally speaking, folks that are in debt, you are in a situation where you're probably not disciplined enough to be able to invest and properly figure out your debt payments. You want to make sure that you are getting the best bang for your dollar, and generally we want people to pay off the highest interest rate debt first, right? It's all about what is the cost of money. Cost of money is interest. And so when you have an interest rate on a credit card that's 22% or whatever, generally speaking, you're not going to get that same type of rate of return by investing in the stock market or investing in crypto, especially now. Right now, it's not a very good time to be investing. Yeah, there can be some ups and downs. Yeah, we see these people that think they can day trade and figure it out even in the down markets. I will tell you, most of the day traders we see that are also truck drivers are not making a profit in their day trading. They're losing money. And so rather than doing that, the cost of money there is going to be more expensive than paying down your highest interest rate debt first. So pay off that 22% credit card first. And then as far as the snowball method, if you have multiple sources of debt, multiple credit cards, again, start with the highest interest rate, pay it off, and then whatever you were paying towards that high interest rate credit card, don't stop paying it. Don't think, oh, great, now I've got an extra $300 a month. Take that $300 a month and apply it to the next highest interest rate debt. And now you're paying, instead of 100, the minimum payment of maybe $35 a month or whatever for that next highest interest rate credit card, you're now going to be paying $335 a month on that credit card. And so on and so forth, until by the time you get to the end, if you've got 5 credit cards, you're now on that 5th credit card going to pay it off relatively quickly, because you're going to be making essentially the same amount of payment that you were paying on all 5 credit cards in total. You'll be applying to that one credit card that's remaining. That's the snowball method. It accelerates as you start paying off other sources of debt.
All righty. Man, I'm going to learn how to pronounce his first name. Adenes Sanchez Gomez with another contribution. Thank you very much. Hey, in case you guys know, if I operate for Swift, can I get paid through my LLC?
So my understanding is yes, that Swift will allow you to set your contract up through your LLC. Todd, I believe yours is. So the answer to that would be yes.
I'm working on that right now. I've got a list of things I got to get done this week, but I'm working on all those things currently. And also, F8 trucking with a $20 contribution. Great topic. Glad you're enjoying it. These are some of my favorite ones to do when we have Trucker CFO on here. It's always learned something. Is it true that we either collect receipts for filing the expenses or use per diem?
So I assume he's asking there either we collect receipts for food for filing expenses or use the per diem. Generally speaking, we tell people don't even worry about keeping your food receipts. If you're spending more than the $69 a day in food, then I think that we probably need to review your spending habits, right? Because it means you're eating out, you're doing more than what I would suggest you do to maximize your dollar. And I think, it gets into other topics that we've brought up. In fact, it might even be a bullet point here that we're going to talk about, Todd. But that is, learning how to find a local Walmart and go out and meal plan and find a way to keep some amounts of food in your truck that you can meal plan with. Maybe get yourself a pressure cooker or a crock pot that you can throw something in so that when you get to the end of the day, you can pull that out and you can smell it while you're driving. And better than buying the crappy burger at the truck stop. Or but anyway, $69 a day, that's a fairly sizable amount. And if you're spending more than that and needing to keep the receipts on that 320 days a year, that's a lot of money that's going out of your pocket that you probably should rethink.
Yeah, that's a lot of food. So let's see. Let's go into another one. You suggest an emergency fund, which I think everybody suggests an emergency fund. But how much should we be putting in there? Is it a set dollar amount? Is it a percentage? What do you recommend on that?
For me, it's about a period of time. I would like to see everybody have personally about 3 months worth of cash set aside. If you can get up to about a year's worth of cash set aside, that would be even obviously better. And a lot of people think, well, there's just no way I can't get it. It starts with just $1 at a time. Like just start building yourself a savings. Do it a little bit at a time. Just start now, and no, you're not going to have it tomorrow, but in a few years, 2, 3, 4, 5 years from now, you may be able to have a full year's worth of savings. And so you need to have that emergency funds. There's a lot of reasons why. I mean, with the way economy's going, you might unfortunately end up being one of the ones that's out of work. And we know that that's coming. We've seen all of the news reports. We know that things are not looking the greatest right now. I know you guys are filling it with rates. In fact, it kind of goes to our next topic, trucking economy. But you need to have that plan, that emergency fund set aside, so that if that happens, you're not standing in the welfare line. You're able to kind of support yourself and be self-sufficient on that front.
All righty, another contribution from Adanez Sanchez Gomez. In the last 10 minutes, I've got more precise answers from you guys than I've gotten the last half year and 300 phone calls. Thank you very much. Well, now you know how I felt when I called in, because I asked a ton of questions and they took time and answered them. They didn't try to rush me through. And that's exactly why I've got their number in the ticker, and would encourage you guys to give them a call. They're going to take the time and answer your questions, and it's going to be just like this. So you guys check them out, or at the bare minimum, go to their website and download that PDF. There's a lot of great information there. And Freedom says, pay yourself first. We're going to get into some more of that. One of them that I didn't understand in the interview is you said give 15% to your future self. Is that the emergency fund for a year's worth that you're talking about building up to, or is it something separate?
Well, so similar to the snowball method, I would say start with building up your emergency fund. The nice thing about an emergency fund is once you have it built up and you've reached that period of time that you feel comfortable having as your emergency fund, once you've got that built up, now you've got cash that you're not doing anything with. And so at that point, start paying your future self. That can include doing some tax advantaged retirement type planning. It can be there's a whole host of them. And what we recommend there is that you actually get with a financial advisor that's going to work with you on setting up the different, perhaps it's an IRA. There's other types of business retirement accounts for self-employed individuals that you can set up. So when we say pay your future self, that's what we're talking about is make sure you're planning for retirement, and don't just stick it into a savings account. Make sure you stick it into an account that over time is going to grow for you. And that doesn't mean go day trade. Most of you, if not 99% of you, are going to lose money day trading. Don't do that. Give it to a professional. Just like we tell people, let us as the tax professionals work on your taxes and your accounting to save you money. Don't think that you can go to Robinhood and do this on your own, and you're going to do it as well as the professional who understands the markets and you're going to pay them some commissions. Yeah, you're going to pay them some fees, but in general, you're going to be better off in 10, 15, 20 years down the road than if you had tried to do it yourself through day trading or Robinhood or any of the others, Webull. I mean, there's a whole list of them now that we see. I recommend you stay away from those.
I had two guys ask me this week, and I'm not sure where to wedge these questions in. But a lot of guys are under the impression that they can lease their personal vehicle to a company or buy a vehicle under their LLC or S-corp, and it's a big tax deduction for them. But I know later in the deal we're going to get into that can be a trigger for the IRS. So is it a good idea to lease your personal vehicle to the company or try to deduct your mileage or things like that?
Okay, so it all comes back to what the IRS deems to be reasonable and ordinary. Okay, or excuse me, ordinary and necessary is the way I should say it. Ordinary and necessary. So, as a lease purchase operator with Swift, is it ordinary and necessary for you to have a quote unquote personal vehicle as a business expense? What is that vehicle doing to contribute to your ability to make money within your small business? And the answer to an auditor is probably going to be nothing. There is nothing necessary about you having a personal vehicle inside of your business operation, and they will probably disallow it. And yes, it will raise a flag. What people need to understand about these flags is when we do your tax return, there is a specific industry code that we throw into your tax return. It's 484120 for most of you. Okay, 484120. That code goes into your tax return and it tells the IRS what industry you're in. It tells the IRS what are many of the ordinary and necessary expenses. And not only that, what are the percentages that should more or less be associated with that specific type of expense? Okay, so they know, and that's how these computers are doing it. When we talk about being flagged for audit, that's what's happening. It's looking at that code. It's looking at, say fuel, and as an owner operator, it's very common for you to take fuel, right? So your allowance, your threshold for being flagged with regards to fuel as a long haul owner operator is significantly higher than say somebody who's driving around as a realtor, or somebody like me who's an accountant. Okay, and so if you throw in there personal, some type of business expense related to a vehicle, non, not your tractor, but your vehicle, it's going to raise a red flag. And then, like I say, more than likely, if you were to be audited, it's going to get kicked out. So, what I ask people when they bring this up with me is it worth it to you? Is the amount of deduction, the tax benefit you're going to get by throwing your personal vehicle, which if we give you truth serum and we ask you, is this a personal vehicle and you're really just trying to lower your tax liability? The answer is yes, right? Is it worth it to you, the amount of tax savings you're going to get, knowing that if you're audited, not only are they going to pull that out, but they're going to hit you with penalties, they're going to hit you with interest, and possibly open you up to audits on other years. And going back to all this other stuff we just talked about, it opens you up. So when I said, if you're doing things the way you're supposed to, and you're just following the book, and you're letting Trucker CFO get every single allowable deduction that is ordinary and necessary, and we are tax planning to see if you're, if you would benefit from an S corporation, or if you should set up a business entity, let us work within our plan. we're going to save you more money doing that than sticking your personal vehicle into a lease and having it as a business expense that's probably not ordinary and necessary.
I think this next question is going to be in that same vein, and you've probably answered it sufficiently. But can you count your home as an LLC home office and deduct your expenses for the home, like power, water, cleaning supplies, etc.?
Yeah, so this one it's a little bit more, there's a little bit more leeway here than I would say with the personal vehicle, right? I mean, generally speaking, like we do some small fleets, just touching on the personal vehicle. We do accounting for small fleets. So we've got fleets as large as 50, 55 trucks, okay? We do that, and their operation is much different. It's much more ordinary for them to have a vehicle, a Chevy Tahoe as part of their office than it would be for a single truck lease purchase operator at Swift, right? So there are things like that that do happen, but for the most part, no. So coming back to the home office, that again, it's going to depend on your operation, but generally speaking, if you're an owner operator, lease purchase operator, and you're out on the road for 320 days, you got one truck and it's just you, and your freight is being dispatched by Swift. It's not like you have somebody at home that's checking load boards or doing other things, right? You're doing the load board, you're doing all that stuff. Then it's more than likely not going to be a reasonable expense for you to count your home office. And here's why. When it comes to the home office deduction, it has to be used regularly and exclusively in the use of your business. So if you're on the road for 320 days, is that home office used regularly? No. You're on the road 320 days. And is it used exclusively? Well, if you've got spouse or kids or friend, whoever else living in your house, it's highly unlikely that when you're gone, people aren't accessing that room to get on the computer, to do whatever. And so it's more than likely not going to meet the exclusively threshold by the IRS. It has to be regularly and exclusively in order to qualify for that home office deduction. So again, I ask, is it worth it to you to get the maybe $300 to $600 tax benefit that you're going to get from your home office deduction to risk opening yourself up to audits and going through all of that stress and potentially heartache and additional expense coming to your pocketbook? And I generally say no.
So this one goes right in that same vein. Will filing home office expenses trigger a red flag as well?
Home office is almost always going to be a red flag because the bar is set so high by the IRS. There are very, very few situations where you're going to meet the exclusively portion of the requirement on your home office, even if you're using it regularly. I'm in my home office right now. I use my home office regularly. I don't use it exclusively, right? I've got a exercise bike right here that you can't see. Okay. There are things like that I'm doing that make it so that I'm not using my home office exclusively. And so I do not write off my home office.
So going back to the personal finance questions, something we all struggle with. You recommend don't try to keep up with the Joneses.
Yeah. So, maybe in the case of truckers, don't keep up with, the Chrome fanatic. I don't know what the case may be. The show trucks are really nice. A lot of the folks that have those show trucks are doing it actually as part of their business. They're making money off of those things. And not that everybody's turning their truck into a show truck, but you want to make it comfortable. You want to make it enjoyable. You want to have some pride in what you're doing. Don't take me the wrong way. You want to keep it clean. You want to keep it looking good, right? Take pride in what you're doing, but don't go out and spend money on unnecessary things, right? Keep that money instead and put it into your emergency fund. Keep it instead and pay your future self. Keep it instead and put it into a maintenance fund. There's all these things that you could be doing and keeping it for the instead so that you end up in a better financial situation later on.
All righty. OTR Vic, with an S-corp, do the taxes that are withheld from the W-2 pay for my business for the business taxes if I'm the only employee of my business?
Okay, so I think I understand what you're asking here, Vic. So the answer is yes, the taxes that are withheld from your W-2 pay as the owner of an S corporation do go towards your overall tax liability. So earlier on, I talked about the concept of S corporations being a pass-through entity, right? So the S corporation itself does not generate a tax liability. So I'm going to use some round numbers here. Let's say you've got a S corporation that is a single member LLC or sole proprietorship. They're filing as a Schedule C. That $100,000 is going to be reported on that Schedule C, and it's going to show up on their 1040, and it is going to be subject to income tax, and it's going to be subject to self-employment tax. Self-employment tax being Social Security and Medicare, and it's going to be a tax of about 15%, not exactly, but roughly 15%. So on $100,000 of net business income on a Schedule C, you're going to have $15,000 of self-employment tax, and then you're going to have your income tax. When you are an S corporation, that same business, rather than showing $100,000 of net income, is going to show $100,000 less whatever you paid yourself as reasonable compensation. And let's just say that reasonable compensation is, say, $40,000 a year. Okay. So now the S corporation is going to show $60,000 of net income. You're going to have W-2 income of $40,000. You're going to have withholdings on that $40,000, which is what Vic is getting at. You're going to have federal income tax, perhaps state income tax, and you're going to have Social Security and Medicare through FICA that is withheld from that paycheck. And all of that is going to get sent off to the IRS or to your state, and is going to contribute towards your tax liability. So then when we do your personal taxes, we're going to have a K-1 from the S corporation, and we're going to have a W-2 for you personally from the S corporation, and it's going to show $60,000 of K-1 income from the S corporation, and it's going to show $40,000 of W-2 income from your paycheck. And now all of a sudden you've got the same $100,000 of income that the Schedule C sole proprietorship shows. Okay, the difference being is you're only going to pay income tax on that $100,000, and you've already contributed some money towards that tax liability through your W-2 withholdings. And then the other portion should be contributed from your quarterly estimated taxes. So that's how you get a full contribution to taxes from an S corporation, is from W-2 withholdings and estimated taxes.
Cool. And one thing that should be abundantly obvious to all of us now is it says another thing you said was, you're a trucker, not an accountant, work with a pro. And this is the exact reason why, because a lot of this stuff is really detailed and specific, and you need somebody that spent a lot of time studying it and not the truck stop accountant. But now let's get into trucking economy. And something I brought up at the start of the show, you spoke about KPI. What exactly is KPI?
So a KPI stands for Key Performance Indicator. All right. So within any business, at Trucker CFO, we have KPIs. There are different indicators that tell me as management and others within the Trucker CFO organization what our business is doing. And so for those of you that are in trucking, you're going to have different KPIs that you need to be following for your personal business. And then there's kind of industry-wide KPIs, and we want to talk about some of those KPIs, some of what's going on in the market. A lot of you are probably familiar with spot market and spot market rates. That spot market rate is a KPI. The contract rate is a KPI. Diesel prices are KPIs, right? These are all different types of indicators that tell us what is going on within the industry. And we can use these KPIs to get a better understanding of what is going on in the overall market and what you folks can expect or try to expect. We try to understand what's going to happen and how it's going to impact you in terms of, at the end of the day, your bottom line, which is also a KPI.
Yeah, there was a couple of examples here, like you talked about spot market versus contract, diesel prices. One that got me was the tender rejection rate. And you actually said that it's actually better for us if the tender rejection rate is going up. Do you want to explain that a little bit?
Yeah, so tender rejection rate is the rate at which loads are being rejected by you, the owner operator. And why is that a good thing? Why would we want to see loads rejected? The reason we like to see that number up is because if loads are being rejected, it means you as the owner operator have access to better loads, right? If everybody is taking the bottom of the barrel type loads and they're not rejecting it because they just need to run so that they can cover their truck payments, that's a bad thing. And right now, tender rejections are down. They've been hovering around 3.6, 3.7%. That's really low. As a comparison, the tender rejection rate during the boom, when spot market rates were through the roof back in the earlier part of 2021, that tender rejection rate was as high as 27%. All right, so that says that of every load that was available, 27%, more than 1 in 4 loads was rejected because there was a better opportunity for you to go get a better load. Whereas now it's 3 to 4 out of every 100 loads that are rejected, and so what happens is if there's not as much demand for the load, then that load is going to do what? It's going to fluctuate, right? So we want to see the tender rejections go up so that there is less availability, asset availability to the shipper to ship that particular load. And so if there's less availability, demand for that load, capacity of trucks to haul that load, then the price of that load is going to climb. And that's what we want to see. So that's a little bit about the tender rejection rate.
Yeah, I thought that was interesting. That was something I'd never thought of from that perspective. Then you talked about load volumes and went into capacity and talked about some things you look at, like new companies, how many are entering, net authority revocation, and the net change. And I think the good example you gave in there was like when was it a couple of years ago when there was a bunch of people that went out and bought trucks because the spot market rates was good and were ridiculously overpaying for trucks at that time.
Mm-hmm. Yeah. So when I look back to kind of the craziness of 2020 and into 2021, what we saw were large numbers of folks who were typically lease purchase, or at the very least maybe owner operators, but were leasing their truck to a larger motor carrier. Those types of folks that didn't have their own authority in droves were getting their own authority so that they could take advantage of the crazy spot market. Okay, so we had a lot of folks that were doing that. And so what happened was there was a huge increase in motor carrier authority. There was a huge increase in folks that had their own trucks. And so the supply of capacity went through the roof. Just like the rates did, the availability of trucks went through the roof as well. But there was enough load volume to support the level of capacity that was out there. And what we're seeing now is you've got the capacity that has stayed here, but the load volumes have dipped. And so as the load volumes dip, there's now greater supply of capacity than what the load demand will offer or support. And so what's going to happen? The rates on those loads are going to come down. And so what we look for to know when that's going to start to turn around is, two things really. When is the load volume going to go back up, or is it going to go back up? Or when is the supply going to come down? It's just simple economics, right? It's supply and demand. And so if you've got a ton of loads, you can support greater capacity. But now we're in a situation where the load demand has come down, but we've got higher capacity. And so we're waiting for that capacity to come down and match or be at a level to which it can support higher rates. And we are starting to see that a little bit. It's not in big numbers. Don't get too excited about it. But we're starting to see that a little bit, to where the number, and it's unfortunate, but when you lose capacity and you have less jobs out there, what does that mean? It means some of you perhaps are the ones that are going out of business or getting out of the industry to do something else. But that's just the nature of the economics. It's what has to happen as people get out of the industry, as that capacity comes down and better matches the level of supply or loads that we have, then we will start to see rates come back up. And then in the short term, what we're seeing is, well, we're heading into produce season. What's going to happen with produce seasons, we will get a spike of load availability. But even that is a little bit questionable because of what's going on out here in the West, specifically in California. We've got potential flooding that's coming. We've already seen some flooding. A lot of the fields for like strawberries and other things, other produce type loads, they haven't even been able to pick them yet. They're not going to be able to pick them. They might even be destroyed, and so that's going to impact the load capacity as we head into produce season. And so some of the better produce loads are going to come out of the South and the Southeast. Florida, Georgia, some of those areas are going to have better produce seasons perhaps than what we're going to see out of California, depending on the weather. So that's kind of a little bit about how that supply and demand works and how it impacts the overall economics of the trucking industry. And your goal as listeners is to make sure you are one of the ones that can survive the downturn, that can survive the lower rates. And how do you do that? You do it by having an emergency fund. You do it by not spending on the chrome and instead paying your future self. These are all things that you want to do to help yourself put yourself in a position where you're going to better be able to weather the downturn in the economy.
We got another great question here. Adenas Sanchez Gomez. What are the tax differences between a regular lease where you don't buy out the truck than a lease to purchase?
All right. So there are some slight differences. The main thing is that with both of those leases, your expense is going to be the lease payment. Okay. If you're in a situation where you are able to buy out the truck, if there are a number of different types of situations that might result in, rather than taking the lease payment, you're actually going to set it up as an asset. So what we're seeing a lot lately is there are some variations of these lease purchase agreements that are going to perhaps change the way we are treating a lease versus a purchase. What I would say is we want to look at your purchase agreement or your lease agreement, and we're going to put that through some scrutiny to decide, is this actually a lease or is it a purchase? And once we've made that determination, that then is going to lead us to how it's going to be treated for tax purposes. But the overall tax difference is you're either going to take the lease payment as your deduction for tax purposes, or you're going to set it up as an asset and take depreciation. And once you do that, in the year of that purchase, you're going to have some options as to how and what we do with that depreciation.
Okay. And circling back to our other deal, you talked about for-hire trucking jobs. Because of what you were saying about supply and demand, should we as truck drivers be hoping that the for-hire trucking jobs go down so there's less truck drivers in the market to kind of compensate for the lower freight volumes?
Yeah. So as motor carriers, as the motor carrier number declines, that is an indication that we're starting to see some contraction in that supply side of capacity, but it's not a direct correlation necessarily, because when you have motor carriers that go out of business, it could simply mean that you've got other motor carriers that are buying up that capacity, and so you don't necessarily have any change in the overall supply because company A goes out of business, but company B buys their assets. All right. So a better indicator is to look at the volume or the number of overall for-hire trucking jobs. And that includes owner-operator postings. It includes W-2 postings. We want to look at that. And if we start to see a decline in the overall for-hire trucking jobs that are available, that then combined with a decrease in the numbers of motor carriers is a good indication that we're starting to see contraction in the overall market. And again, it's starting to happen, but it's not in any types of numbers that are going to cause some significant swings in the overall rates. We're going to see rates come up a little bit, assuming that the load availability stays at or near where it's at. We don't want to see load capacity go down. So if we have some significant weather related events that really hurt the produce season, that could outweigh the benefits of what we're seeing in terms of the capacity of the overall capacity or availability of capacity in the market. So we want to see availability of load stay at or above where it's at, and we want to see the numbers of jobs come down, and we want to make sure you are one of the ones that stay available, and that it's the ones that aren't listening to this show that perhaps don't do the things they need to survive.
The next part, I got some interesting information from, because I'll get phone calls from guys and they'll go, "Oh, I can't make it. Diesel's $5 a gallon and it's so hard and boo hoo hoo." And it turns out that you said in March of 2023, the average fuel was 4.34 a gallon. And you said that it was actually at a 52-week low. And
Yeah, so fuel is at a 52-week, or was as of the time of these numbers. I'm actually not totally up to speed on what it did last week. Haven't pulled those numbers yet, so it might be back up. It might even be down again. Not sure. But those fuel prices, it really kind of depends on what it is, what kind of fuel program do you have, and what kind of fuel surcharge are you getting. If you're with a motor carrier that has a really good fuel surcharge program, the swings in these fuel prices aren't necessarily going to impact you, right? Because that fuel surcharge is going to more or less cover you over the long term. You might gain a little bit as the fuel surcharge is on its way up. You might lose a little bit as it's on its way down, or vice versa. It's just going to depend. But the whole purpose of the fuel surcharge is, over time, it's going to, by a little bit, more than cover your fuel expense. That being said, if you have the option of getting into your own fuel program, and I know you recommend a very good fuel program on this show. I'm very familiar with that fuel program. I see a lot of our clients use that fuel program through ES Advantage. It's a great program, and I recommend, if you're not on it, I recommend you get on it, because again, those of our clients that use it are saving a ton of money on fuel. And whether you're on fuel surcharge or not, if anytime you're saving money through a great fuel program, that's just money falling to your bottom line.
yeah, that link is in my description for ES Advantage. You just answer like 4 or 5 questions and they'll give you a call back, usually the next day or two. And they've been great to work with. And we're going to have them on the show here probably in the next week or two to talk about insurance and fuel both. But you mentioned this is something that'll benefit all of us. What the 5 highest states for fuel was and what the 5 lowest were. Turns out Maine, California, New York, Washington, and Pennsylvania were the highest, and Maine being the highest of all of them. We all complain about California, and I thought for sure California would be at the top of the list, but actually Maine was the highest at 4.85 a gallon. And you said the lowest states, and these were pretty predictable. Iowa, Oklahoma, Kansas, Texas, and Missouri were the 5 lowest.
Yeah. So
And
the important thing to remember with those is, I just mentioned the importance of having a good fuel program, getting those fuel discounts. But in addition to having those fuel discounts, you need to fuel plan, right? You need to know, okay, where's my fuel? What is this load paying me, and where am I going? And you want to try and fuel plan in a way that if you're going to be, I don't know, what is an example using these states? If you're headed from, say, Missouri into California, you want to try and fuel up along the way so that you avoid California's high prices, right? You want
yeah,
to take advantage of those lower states and avoid the higher states, because again, that's all going to fall to your bottom line.
the S Advantage has an app that you can actually put, all right, I'm in Philadelphia, I'm going to Denver, and it will calculate a fuel route for you along the way and tell you where the cheapest places are. So it's really handy for that, uh, as when you're trip planning. Let me answer this one real quick. Do you guys have any fuel program recommendations? Yeah, get in my description, which if you click on the title of this video and it linked for ES Advantages there, and I save usually about 1,300 a month when I use that card. So, and I've done videos about it where I actually open up the app and show you my actual savings. It's not me pulling a number out of the air. I can almost guarantee you'll save money. I've yet to have somebody get that card that called me and said, I'm not saving anything with this card. I don't like it. It's a waste of time. Everybody's like, I can't believe what I'm saying. So you guys really need to check that out. Here's a good question. The problem with that is all the schools are bringing in new drivers. There should be a hiring freeze on all the mega schools. Would a hiring freeze in trucking help things right now, in your opinion?
I don't see any way that you actually get that accomplished. The free market would basically result in that never happening, right? You're going to have the motor carriers that need to hire or can benefit from taking advantage of a hiring freeze are going to exploit that. And on top of that, you're going to run into regulatory issues more than likely by trying to do something like along those lines. So it's just not going to happen. I guess I can't say anything other than that. It's not going to happen.
Yeah. And we've already done a pretty good job of covering load volume. That was what you talked about next, and tender rejections and
Hey, I
capacity.
wanted to just point out something real quick. So you mentioned $1,300 a month savings in fuel.
Uh-huh.
I like when I hear numbers like this. I do the same thing when I'm talking to people about taxes and tax planning. You hear a number like that, and it's like, okay, that's great. That's good. $1,300 a month in my pocket. Take that out over 5 years. Do you know what that means? You're going to be saving over 5 years.
No, I hadn't put a number to it, but it's a
Okay.
lot.
Over 5 years, that's $78,000. So Todd, do you want $78,000 in your pocket?
Absolutely.
Absolutely. Right. So think long term, analyze things long term. Don't make your decisions based on short term numbers. Look at the overall impact going out at least 5 years so that you can have a better understanding of what it's going to do, to your overall bottom line and to your pocketbook.
All righty. And we've got let's see what else. We've covered a lot of this, so I'm skipping ahead. Um, Basically, you said that what this capacity information is telling us is that there's too many trucks in the market currently until freight picks back up.
Yeah.
And
And I guess another thing to look at with this is not just the price or the revenue on these loads, the rates on these loads that's going to benefit from capacity coming out of the market, but it's also the cost of used trucks that's going to come down. Now, if you're looking to sell and get out, it's not that means you're going to be a casualty of this perhaps influx of used trucks on the market, and having an influx of used trucks on the market is going to increase the supply of used trucks on the market, and as a result bring the price of used trucks down. Now some of that is also needs to be weighed against, well, what's happening in the new truck market. What is the availability of new trucks? And there still is a lot of economics going on that side that are keeping used truck prices up. But if you're thinking about buying a newer used truck, my recommendation would be to wait for these prices to come down. And weigh that against how long. It might be 2 years before we really see the prices come back down in a meaningful way. But if you can wait that long, do it, and don't buy high. Wait for them to come down and buy a little bit lower.
when you was talking about for hire trucking jobs, you mentioned FTR. What is FTR?
There's some different. I won't plug exactly what it is. But basically, you can go out online and you can find different sources of these types of rates. And FTR is one of the sources where you can find information on these rates. So
Ah,
if you Google it, it's more than likely going to come up for you.
because you said that they said there was an 8,500 decrease in jobs in February, and it was the largest decrease since April of 2020 when COVID was going on.
Yep.
And so I didn't know if that was a government agency or what that was.
No, so you'll see you'll see if you look at the numbers, you'll see that these numbers, especially for February, are starting to come down. Like we're starting to see indications that perhaps if we look out to second quarter, third quarter, fourth quarter, that we might start to see rates come back up. The goal is for you to be one of those ones that can benefit from those increased rates. And that's not a promise, it's not a guarantee, because in between now and then, there's a lot of other things that could change, right? You could have things that hit the overall economy that then cause a reduction in the load demand. And if that happens, we're not going to see the increase in rates that we want to see. So it's just right now at this particular point in time, we're seeing indications that we might see some relief in the near future, 2 to 3 quarters out, of rates coming back up, pending other things that might happen in the market over the next 2, 3, 6 months.
And Tim has a comment. In 2021, the market was so good, a lot of people bought trucks. Now we need to wait for them to sell the trucks, so it lowers the amount of trucks on the road, so the freight market comes back up.
Yeah, you need those people to put those trucks on the market, which will bring the prices down. But you need also for those trucks not to be bought at higher prices or bought up by other motor carriers and just put right back out on the road. Right? We need capacity to come down, at least at current volumes. And there are always winners and losers, no matter what the market is. In the best of times for truckers, there are others within the market that are not benefiting. And so the same thing now. You can have winners even in a down market, and you want to do everything you can to try and be one of the winners by cutting your costs, by analyzing your costs, looking for ways to cut those costs out of your bottom line. Right? You can't necessarily impact the rates that you're getting on the loads. You can pick the best loads. You can improve your relationships with your dispatchers and do everything you can to be front and center for those good loads that are out there. But the rates themselves, you probably don't have a huge impact overall on. So the best thing you guys can do as lease purchase operators is to really focus in on your expenses. Get a fuel card in place. Get a good insurance program in place. Fuel plan. So as part of your trip plans, you want a fuel plan. Do all these things that are going to result in more money falling to your bottom line.
And so you were saying that it looks like capacity will tighten till probably the end of Q3. If the load volume stays steady, you'll start to see an increase in contract and spot market freight. Is that kind of the general prediction everybody has at this point?
Yeah, you'll see that said a lot out there. I mean, I'm. It's not like I'm the savant that's
Hmm.
preaching unheard news, right? You're going to see this in a lot of places, and there's a lot of options for you out there to listen to and take in this type of content. But we're glad you're right here listening to us right now, and hopefully learning something new.
Yeah, and they're saying, I've heard this several places, that they're expecting the produce season in California to be kind of a disappointment because of weather. Are you hearing that too?
Yeah, and we touched on that just a bit ago. That the weather, because of the tremendous snowpack that we've got here out in the Sierras and the Rocky Mountains, and the continued rain that's coming in from these atmospheric rivers hitting the lower elevations of California. There's some significant risk to the overall produce season that could negatively impact. It just goes back to what I just said, right there. You can look at the trends, but what you can't do is predict what the other inputs to these numbers are going to do in the future. And we just want to try and avoid those major incidences within the economy that are going to negatively impact things overall. And then without those, we can generally look at some of the more steady inputs to get a good indication of where things are going.
And this is kind of interesting too, that credit card delinquencies are going up and consumer spending starting to lag, and a lot of credit card debt is starting to increase. It seems like it's a combination of people living outside their means and just people struggling in general right now, kind of like what you were talking about keeping up
Sure.
with the Joneses. But the housing market is a bright spot now. Explain that one to me.
Yeah, people are still building houses, even with the interest rates being where they're at. Maybe they committed to and signed on the dotted line before these interest rates started to skyrocket. Mortgage rates have more or less, I mean, they've gone up, but they've been a little bit up and down of late. I think with this latest Fed increase to the interest rate, we're going to see them go back up again. But overall, housing continues to be strong. And I think a big part of that is the fact that it's actually less expensive right now to build new in many places than it is to buy used.
Wow.
Not too dissimilar from what we're seeing with used trucks, right? You can, I mean, some of these used truck, or excuse me, some of these newer trucks are so closely sometimes priced to some of the used trucks. It's like, why wouldn't I just buy new? Well, the answer there is you usually can't get your hands on a new one. But with housing, it's relatively easy to go out and find where they're building new houses. And yet the used house prices are just through the roof still. They haven't really come down too much.
So it says that the indicators are pointing towards a demand reduction. So that doesn't sound good. That sounds like people are really going to start pinching pennies, is what they're predicting in the coming months.
So that's the piece that we're looking at as far as the load availability for truckers, right? Is there going to be a continued demand for loads to be hauled by the truckers? And so what you're talking about with the credit card debt and the consumer spending is that through COVID there was a lot of free money available with the COVID funds that were put out there. There were also a lot of people that came back into the workforce. There was a lot of money to be had, whether you were working for it or you were receiving it free from the government. A lot of money was in the market, and people were using that money to go out and buy their new TVs or buy a new car or buy a new house. And so prices for everything just started to just climb, and that's why we've had to, we've got the government trying to increase interest rates because they're trying to tamp down that demand. And as that demand gets tamped down, the general public is slower to react to that. And so as they run out of money, they've now set these habits of spend. And so they've spent through their available cash. And what do? They turn to their credit cards and they start spending on their credit cards without thinking that, one, the interest rates on those credit cards are also going up, and I've got to pay that back here sometime soon, and it's not going back to what it was a year or two ago. And so the time to pay the piper is coming up pretty quick.
Wow. And they didn't think about that when they were doing all of that. Just
Mm-hmm.
like the housing market became a seller's market, the trucking market became a customer's market. Let's see.
Market.
Oops. Let me get back to it.
In a customer's market. I mean, yeah, I think what he's saying there is that by the trucking market became a customer's market. I don't know if he's making a reference towards the overall supply of loads, right? That impacted. I mean, the load availability was through the roof, and that's why the tender rejections were through the roof, because there was just so much freight that needed to be hauled. It resulted in truckers having a great market to work in because there was just so much stuff that needed to be sold. And another point that's not necessarily in these notes that we should maybe mention is that with what we're seeing in the markets and the consumer spending starting to decline, inventory rates at your shippers are starting to climb. And when inventory rates increase, that decreases the amount of loads that need to be shipped because the stores are not in positions where they are needing to restock on the various products that they need to ship because it's already sitting in inventory, and it's sitting in inventory at prices that they can't afford. And so that you might see some wholesalers jump in and buy some of those, but overall, the inventory, that's not what you want to see as a trucker, is inventory rates increasing, because that just means there's greater supply in those warehouses for the shippers to rely on once consumer spending comes up. And in the meantime, they're not needing you to resupply their warehouses.
Marcus says he's enjoying the chat. Want to remind everybody, you can learn more at truckercfo.com. Their phone number is also down in the ticker below. We're both going to be at Matt's in Louisville the next few days, starting the 30th through the 1st. On Friday at 1 p.m., we're going to be giving out t-shirts. And on Saturday morning, he's going to be on Sirius XM there at the truck show. So if you're in the area, stop by, check it out, say hello, and they'd be happy to answer your questions and talk to you at that time. We've been going about an hour and a half. If anybody's got anything else they'd like us to talk about, throw it up and we'll take a look at it. And if not, we'll probably cut it pretty short because I'm sure he's got a plane to catch probably tomorrow.
Tomorrow, I'll be heading out there tomorrow, and look forward to being there and talking with as many of you as we can meet up with, and it'll be a lot of fun. So yeah.
Yeah, I'll be. I'm going to do a bunch of shorts of the trucks and stuff I see out there, and try to meet as many people as I can while I'm out there. So, but I'm not seeing a whole lot more. Do you have anything else that we need to cover or that you want to talk about before we cut it short tonight?
Just reach out to us. I just want to touch a little bit on our name, Trucker CFO. It is not all about accounting and taxes, right? That is our product. That's what we do for you is accounting and taxes. But when it comes to the information, the content that we're going to create, it's going to be about more than just accounting and taxes. We're trying to put content out there for you through our podcast, through our blogs, through our website that a CFO of any other company would bring to their CEO. You guys and gals are the CEOs of your companies. You need information at your fingertips to help you make decisions that are going to benefit your company. And that's about more than just accounting and taxes. We are going to help you to save money on accounting and taxes. But overall, we're going to help you understand different areas of the industry, different areas of the overall market, and we're going to point things out to you through conversations like this and through our other avenues of content to help you be successful in what you do and hopefully survive these difficult times that we're currently in and that will probably continue for the next little while.
All righty. Let's see here. Some of you have got some swift questions. We'll get to those in a few minutes. We just want to take advantage of our time of Trucker CFO while we've got him here. Tim Back says, good night, gentlemen. Thanks for the show. Let's see. Yeah, we're just getting a bunch of hello stuff now. So I'll go ahead and let you get to it. I want to thank you for coming in tonight, and I'll probably run into you Thursday over there. If not, for sure, I'll see you on Friday.
Yep, we'll connect up, and for everybody else out there, give us a call. Check us out on our website. Let us know that you heard about us from Trucker Todd, and we'll get you signed up. We'll get things going for you in the way of tax planning so that you guys can save money. That's what we do, and it's not just a little bit of money. Going back to what I said to Todd about his fuel savings, $78,000 over the course of 5 years. We've got examples, many examples of saving people that much money and more just through some simple tax planning that your everyday, even trucker accountant that many of you guys talk to is not going to do things that are going to save you the type of money that we can possibly save you. Every situation is different, but it just takes a little bit of tax planning. Give us a call and we can work on that with you.
Yeah, one last thing on that. They estimated just the changes that you guys have made for me so far that I'd probably save about $15,000 a year in taxes. So there's definitely, if any of you found $15,000 on the ground, would you pick it up? And we're not really changing anything. I'm still driving the truck, doing the things I was doing, but they found tax advantages for me that are going to save me an estimated $15,000 this year. So it's worth that phone call to call them and see what they have to offer. And well, I hope you'll do that. But
So,
anyway,
Todd, real quick, between your fuel card savings and your tax planning savings, you are saving almost the cost of a brand new tractor over the next 5 years. Just think
Isn't that
about that.
crazy?
Yeah.
Isn't that crazy? Yeah, and it's a lot of money. It's, all of us would be glad to get a raise that big. And then the other stuff that he talked about, like truck insurance, I'm saving over $200 a month. Actually, it's probably closer to $500 a month over Swift insurance by going out and getting my own insurance, because their insurance just went up $100 a week, between 80 and 100 a week. So it's the little things that make the big difference. And so that's something they've made me more aware of and helped me take advantage of. So I really appreciate them, and look forward to running into them at Matt's. I'm going to definitely be there looking for them. But thank you for coming on. I appreciate you being here tonight, and we'll
No
see you
problem.
later.
See
And
you next month.
thank you, Robert. Sorry for getting your title wrong. He is not an IRS agent.
All right, Todd. We'll talk to you later.
We'll see you. Bye bye. All righty, we're back. Now let's get into your Swift questions. Um, it's I always like having them on. They're great. They really are. And I would say that whether they're here or not, they're just a good group of people over there. I'd like to go to their headquarters and meet everybody and kind of do a video of it. And who knows, we may do that in the future. So let's get back to some of these questions. Hey, Channel 19, I'm glad you made it. You missed a really good interview. Go back and check it out in the replay if you get a chance. They do still pay deadheaded miles for dispatched loads. They did break that once they release this load board to the public, they will no longer pay deadhead. And I'm not really excited about that. I couldn't find a way to spin that and make it a positive thing. Now I know some of you are going to tell me, well, on load boards you typically don't get paid deadhead, and that is correct. I've ran load boards before. I had 87 of them when I was at Dart, and but I also got paid percentage, and I could negotiate my own rate. And so I would like to see them. If they want to keep this mileage deal, fine. But I'd like to see them come up, 15 or 20 cents a mile on the loaded pay if they're planning to take the deadheaded pay away. Um, I don't see that happening, but that's what I'd like to see. I'd feel a lot better about it. I just don't get that warm, fuzzy feeling right now. Let's see here. One more thing I want to say to Channel 19. Yeah, we had some problems the first 10 minutes of the video. Nobody could see or hear us after the intros. So um, a lot of people missed a lot, but I still hope you'll go back and watch it if you get a chance. Yeah, Trucker CFO, they really are something else. They're head and shoulders above ATBS. I mean, if you don't believe me, call both of them and tell me what you think. I appreciate it, Freedom. Also, I've seen your video about your pay breakdown at Swift. Would you say that you're making about the same as in that video now that you've been working for Swift about 9 months? No, I would say I'm making more. And I would say you'll make more, whether it's at Swift or anywhere else, just because you learn the system. The time before when I worked for Swift was 21 years ago, and a lot has changed in 21 years. And so it takes me usually 30 to 90 days to fall into the groove at a company and learn what works there and what doesn't work there. And so, no, I definitely I average about 2,500 a week here, but I do it. Sometimes it's a lot more. Last week I had 3,700 miles. This week it looks like I'm going to have about 3,300. And I left a lot of meat on the bone. I could have ran more miles, but I'm already, as you can see, at the hotel getting ready for Matt's. So tomorrow I'll do things like laundry and things like that, little unwinding, relaxing. And then Thursday I'll hit the ground running over there. I'm going to try to meet everybody I can meet, company wise and driver wise. So if you're there, you see me, come up, say hi. and we'll go from there. I'm going to try to get some videos out, some shorts about trucks I see. If I can set up some interviews, stuff like that, I'll do that. I've never been to a truck show before, so I really don't know what to expect. But I'm going to try to take you guys along on my journey if I can. I've got 2 phones, and I bought a rechargeable battery pack that snaps to the back of my phone. So I'm hoping I can go all day, but we'll see how it goes. I really wish I could take my laptop over there, but uh, there's not really a booth that nobody's had me come in for a booth appearance. Like I said, I'm gonna be hanging out with Trucker CFO and stuff some. So if I was actually at a booth, and you never know, I may get an invitation while I'm there, then I might take the laptop and do some stuff like that. So we'll see. I'm getting ready to start lease operating for Swift, but I got a bit scared after seeing your last live. Yeah, here's the deal. I'm going to tell you guys, a lot of people go, oh, Todd, you're just a recruiter. I really don't see myself as a recruiter. And I've told Swift this, I see myself as an umpire. And I'm going to tell you the truth. And no matter what company I'm at, sometimes uh, I'm going to have good things to say about the company. I'm going to like what's going on. And sometimes I'm going to have bad things to say about the company. And I still think it's a great place to work. But them and me, we have our issues. And I'm going to tell you guys the truth. You guys should do your own research. You should ask your own questions. But you know for a fact when you ask me a question, I'm going to tell you the truth as I see it. Now, um, I can't spin it where right now we're getting deadhead pay, and when this load board goes live, we're not getting deadhead pay. I don't know a way to spin that into a positive. Now, I guess you could stay dispatched if you wanted that detention. I mean the I keep calling it detention pay, the deadhead pay. You could stay dispatched and you'd get your deadhead pay. But some guys have been waiting for this load board for over 3 years, and they kind of feel like the rug's being pulled out from under them. And I'll be honest with you, just like every other company right now, there's some guys that aren't getting their miles. I talked to a couple of guys this week that they only had like 1,800 miles for the week. I mentioned earlier in the video, I had 3,700 last week. I've got roughly 3,300 this week, I believe. I just scanned 2 trips today, so I don't know the final number. It's going to be somewhere between 3,000 and 3,300 miles for the week. So I'm still getting my miles, but the 2 weeks prior to that, they were a little low because the loads delivered after the cutoff, and so it went on to the next week. But I'm still getting, 2,500 to 3,000 miles a week. And some of it is I know where to run. Some of it is I've learned Swift system. And some of it's just flat out luck, being in the right place at the right time. But I found the harder I work, the luckier I get. And I seem to be in the right place a lot more often than I end up in the wrong place. No, my truck did not break down. I am in a hotel. I'm going to be here till Sunday morning. I'm going to Matt's and just taking a little time off. And my wife's got some family in the area. I may get to see them. I don't know for sure yet. But yeah, I'm here. If anybody's passing through the Louisville area and you want to hang out, holler at me and we'll try to put it together. When the load board is up, with all lease operators be forced to use it? No, not at all. It'll be an option. You don't have to get on it. As I said, you could stay dispatched and get your deadhead pay. And they know that going in. There's a lot of guys that don't want a load board, that they like being dispatched and not having to worry about freight lanes and things like that. So you'll have some choices. But for me, coming off, you guys know, I running those load boards as long as I did, I like the freedom, and I know the lanes, and I know where I need to go and not need to go, and what I need to do to be successful. So I hated giving that control up and going back to a dispatched model. But I mean, here, the way they dispatch is not terrible. You can send a macro 30. You can call the 3 planners and kind of tell them what you're looking for. And so you've got some options. They have regional planners when you get in certain areas. If you get to know them, you can write down their name and phone number. And when you're back in that area, you can call them. So even when you're dispatched, it's not a terrible situation. I've turned down several loads in one day and I've never been blackballed or anything like that. So uh, even as a dispatch driver, it's not horrible. And now, even with me having access to the load board, I still work with dispatch regularly. By the way, I'm going to call somebody out. I normally don't mention names, but Coretta is one of the planners here. And the last 2 times I've contacted her, she saved my neck. I needed a load going home for a doctor's appointment, and she made it happen really, really quickly. And getting to Lubbock's not easy. And then getting here to this Matt's, I needed a load to get here. There was nothing showing on the load board, and she really came through for me. So she's really good at what she does, and I I know I'm breaking my rule of calling somebody's name without getting their permission, but I really feel like I owe her a public thank you because this makes twice in a row where I needed a load board miracle and she made it happen. Yeah, that's clean, and I'll talk about that for a second. That's after everything except taxes. I don't give tax advice, and after having Trucker CFO on, you see why. Taxes are very, very complicated, and every one of us is going to owe a different amount. Some of us have state income taxes, some of us don't. Some of us have a lot of deductions, some of us don't. So that's all of that. Now, obviously, I don't have my cell phone bills in there. I don't have my personal expenses in there, but that's net to me in the bank after fuel, truck payment, things like that. No problem. I appreciate you coming in here and watching and asking your questions. Um, Several of you tonight really stepped up and came through. Y'all asked good questions, and I that makes this show so much fun to do when we've got smart people in here asking good, intelligent questions, and it makes the conversation flow so good. So I want to thank you and everybody that come in and participated like you did. Let's see, what else have we got here? I was really let down yesterday. The job I thought I had turned out to be crap. It was a 1099 position and was being taken advantage of right out of the gate. Yeah, I've said it on here before. I would never do a 1099 job as a company driver. Um, we've had debates on here about it if it's even legal. Um, the way I understood it from Trucker CFO, it's technically legal, but it's not a good idea. Basically, your employer gets all the deductions and you get the crap taxed out of you at the end of the year because of it. Thank you, Ted. I appreciate that. I really do. It's not me, it's you guys. It's you guys coming in here asking great questions. You guys emailing me great questions that force me to do research and learn. You guys have made it what it is, and I appreciate each and every one of you. What kind of miles per gallon is your new Freightliner getting? So when I did the video a while back and I was running 60, um, I was getting about 9.4 if I remember correctly. I haven't done a comparison lately, but I did look at my IFTA reports and it was showing me at 8.4, but I've been running a lot faster lately. I've been up against a lot of hard deadlines where I needed to run. And so, and I've been pulling heavier loads. This one I just delivered was 35,000. The two before it were in the 40s. So I've had some heavier loads, but I find myself in the 8.4 to 9.4 range. I'd feel real comfortable telling you in the high eights most of the time. And like I said, I've left a lot of meat on the bone lately. I could definitely uh, have got better fuel economy than what I've got, but I was running hard. I was in colder weather, things like that. It's a Detroit. Thank you very much, Addie. I want to say something. Tonight we had a lot of donations to the channel, and I really appreciate it. It's honestly not expected, not required, but it's always appreciated. I don't care if each one of you sends 50 cents. I appreciate each and every one of you. We're in tough economic times right now, and if you guys are willing to contribute during tough times like that, it means that much more to me. So thank y'all for if we don't get nothing else out of tonight, thank you each and every one of you for coming in and watching, for leaving good comments, and for giving me almost 2 hours of your time tonight. The only other thing I would ask, especially for those of you that are struggling that can't do a contribution, give me a thumbs up and share this video. Those two things help me more than I could ever tell you. It puts me higher in the YouTube algorithms, and a lot more people see the videos. And so, if you can do those things, I greatly appreciate it. Yeah, I've been very happy with the Freightliner. I'm not going to tell you that it rides as good as what my Peterbilt did at Dart or my Kenworth at Dart, but the Freightliner's been reliable and it's been efficient. And so, yeah, it's a great truck. It's comfortable, and I like it a lot. I do, but I do miss my Peterbilt. I ain't even gonna lie. And if Swift were to ever get Peterbilts, I might get new truck fever. I ain't even gonna lie. Have you got the Volvo on the road, or have you got the Volvo road ready yet? I hadn't even been home. I've been out here working, and this is my first break to come do the truck show. But I've got to go home. Since I did that LLC and S-corp, I got to go open a business checking account, and I'm going to be in town, and I'm going to make it a priority to get that done. I would ideally, I'd like to lease it back to Swift and run it here, especially if Trucker CFO says rates aren't coming up uh, till at least the end of Q3. I might as well run it here, not have a truck payment, and make some good money. But I can get it ready really, really quick if I go home. I just been out here working and nest egging money as much as I could to prepare for that. But it's coming very soon, I can guarantee you. Thank you, Freedom. My Freightliner has 50,000 miles and never goes about 60. The average 7.4. You may want to get it looked at and see if there's something going on there. I mean, we got guys here at Swift that are getting over 10 miles a gallon, and so a lot of them are at 9. So if you're down around 7.4, it's got to be something. Are you idling a lot? Are you running mountainous regions a lot? There's got to be something going on there. I like them both for different reasons. It's hard to knock that Detroit though. I remember when I started driving, I was in a 60 series Detroit, and it was a great engine. And from what I understand, these new Detroits are a derivative of that. So it is a great engine, but I had good luck with Cummins too. So um, there's a lot to it. Some of it is driving technique. A lot of people think, especially in an automatic, that they got to hammer it when they're taking off at a red light. What I was always taught was to pretend like you have an egg under the pedal and kind of gently press the pedal. Also, when you get off on an exit, instead of coming right up to the stop sign and slamming your brakes, try using your jakes to slow down and come to a gradual stop. That'll make your brakes last longer. That'll make your fuel economy be better. You wouldn't think those things make a difference. Also, I run my tires usually around 110. That lowers your rolling resistance. That seems to make a big difference. There's just a lot of things. Using your cruise control, avoiding idling if you don't have to. using OptiIdle when you do have to. Things like that make a big difference. So I do my maintenance around 35,000. My contract requires it at 50, but I do it at 35, and I really feel like that's excessive. I kind of feel like I should do it at 25, but I'm doing mine currently at 35. It's not that expensive for what you get, and so I like that extra peace of mind. Yeah, Pablo's getting 8.2 as a company driver. That's not bad at all, actually. Brian says, "You're the best, Todd. I appreciate everything you do." Man, I really appreciate you, and thank you for the $4.99. You guys are awesome. I really do appreciate you guys. You know, a lot of people don't realize um, that StreamYard costs money. It's a subscription service. And, you know, these cameras, I've got 2 phones here. I've got 4 more in the truck that I mostly use as backups. One of them is a 1 terabyte that I use for storage for these videos. There's editing expenses, things like that. Even though I'm not a great editor, I still have software for that. So I appreciate when you guys do stuff like that because it kind of offsets those expenses. And we've got some more stuff coming in the near future. So you guys stick around for that. Um, I've said I've said before that when we got to 5,000, we're going to start looking at merchandise, and so we're going to have some other stuff coming out in the real near future. Also, going to have some big interviews coming up for you guys. So you guys make all of that possible with just giving me a couple hours of your time each week, and I appreciate each one of you. Yeah, it's uh, Cummins is a funny engine. It's the tale of 2 engines. When I was at Roadrunner, Cummins just about bankrupted me. And you know, when I come uh, to Dart, I had a Cummins that was great, never had an issue. So it just depends on the truck, who had it before you, how well it was taken care of. But overall, I think Cummins is a good engine. But I think the Detroit might be a little more efficient. But I think the Cummins might have a little more power and some of its gear ratios. There's just so many factors that go into that stuff. And I'm by no means an expert on it. I'm just giving you my 2 cents worth on it. Do you have to do maintenance with Swift? So from what I understand, it depends on your contract. If your MRP, since they're paying 80% of it, you kind of do have to work with them because they're on the hook too. In my straight lease, I don't have to. I'm I can go anywhere I want, and if it's not covered under warranty, I got to pay for it. So I generally go to reputable shops to get my oil changed, and if it's anything that might possibly be warranty, I'm going to the dealer and letting warranty take care of it. Having said that, I did have to get a windshield done at the Oklahoma City terminal, and it was a really good experience. And so I don't have anything against the Swift shops. And if I had to use one, I'd be okay with that. Um, so I think there's just a lot of options available to you, but you definitely need to read your contract and see what's allowed and what's not allowed, depending on what kind of truck you have. And if I had an international, I'd be going to Love's. That's who they're certified to do international. TA's kind of certified for Freightliner. So it just depends on your situation. You have got me into trucking by your videos, and anytime I was at Swift, and even now you're always there by the phone at any time. Well, I appreciate that, Brian. I try. Hey, I drop the ball sometimes. I'll go ahead and tell you, there's some of you that's called, and for whatever reason, I missed your call. I didn't see your email, but I've never purposefully avoided anybody. And I would say, if you don't get me, keep trying. Um, you know, that's why I can go to these truck shows, because I know that I haven't intentionally misled or screwed anybody over. And people are generally glad to see me because uh, they know that I'm here. I'm trying to help people. And so I appreciate it. It's a lot of fun going to a terminal and people running up and saying, "Thank you. That video you did on this subject helped me," or "That time you talked with me on the phone for 45 minutes. That phone call changed the way I drive a truck, and now I'm not in the hole anymore and I'm making money." Or the guy I helped that his pickup got repossessed, and because of me, he was able to get his pickup back. Or the guy that his landlord kicked him out of his house, and I was able to help him get his house back. Those are, you know, those are far more important than money when you can know that you made a difference in somebody's life. And you guys have definitely made a difference in my life. It's not a show. It's not kissing up. I really do appreciate each and every one of you. Let's get the Audit did another $9.99. Man, you guys are great tonight. Let's get this to $100. We can do it. I appreciate you, man. I never, when I started this tonight, I never thought that would happen, but I appreciate it. And that's funny too. When I started this channel, I remember at first I didn't even tell my family. It was top secret. And I thought, man, if I could ever just get 100 subscribers, and now this week it's looking like we're going to be at 5,000. And I remember when I was at like 2,000, I said, when we get to 5,000, we'll have merchandise. And I said that at the time thinking, there's no way in the world we'll ever get to 5,000 subscribers. It's not going to happen. And now here we are. We're going to hit it at the week that I'm at the truck show. And I think that's awesome. And some of you have been with me for the whole ride, and that's even more awesome. So I really appreciate it. All right, man, be careful out there, and thank you for coming in tonight, and thank you for all the contributions. You're awesome. And we're going to be back Thursday night. I hadn't even got to tell you about this. I was so excited about the show tonight. I didn't even tell you. Thursday night, this Thursday and next Thursday, I've got scheduled for Joe Wentz to be back on. He's the truck driver with his channel that he does the trucking kind of from the perspective of a company driver, day in the life type video. And he plays the guitar really, really well. He's going to be on. And then my good friend James is going to be on. And me and James are going to kind of give our perspectives on Matt's. He'll be here. We're both going to go through it. He's been to one before. I haven't. And so we're going to do that. And then Joe's going to throw in some music, and we're just going to kind of relax and have a good time. I'll be here in the hotel kind of doing my thing. And I think James will be in his truck and Joe will be at his house. It worked out. He's going to be off work. And so you'll get to see me and a couple of friends hang out, and we're just going to have a good time. And I think y'all will enjoy it. We'll enjoy answering your questions and just having a good time. And so look forward to that. It'll be Thursday night at 5 p.m. Been getting that question a lot too. So I do these shows every Tuesday and Thursday at 5 p.m. Central. And you never know, before too long, we may start sprinkling a couple of in on other nights of the week, just because it's a lot of fun. And I really enjoy interacting with you guys and gals. I got to make sure it's not gender specific when I say guys. Hey Wesley, thanks for coming in. Just heard Cisco went on strike. I'm gonna have to look into that. I hadn't heard. I've been kind of out of the loop lately, and I need to. I used to do a lot of news videos, and this channel started off being news and opinion, and I haven't done a whole lot of that lately. I've just been doing these lives, but I'll look into that, and if I can find some information on it, I'll try to get a video out and kind of talk about it and give you my 2 cents worth on it. But it's I just can't believe what's going on in the world of trucking right now. But I guess it runs in cycles, and I guess these things will come from time to time. And for those of us that can make it through, then we're going to really do good on the other side. But unfortunately, some of us aren't going to make it through. Some of us are going to go back to company driving. Some of us are going to say it's not worth it and go get a job, a more traditional job. But I'm an eternal optimist, so I'm not sitting here sweating the small stuff. I think it's all going to work out. But I do need to look into that. I'm glad you told me. Thank you for that. Also, you guys, my email's there in the ticker. If you see something in the news that you think I ought to be talking about, email me the link for the article. If you have show ideas, things that you'd like me to talk about, or questions you'd like me to answer, email me. Let me know. I'd be happy to do it. That's the hardest part about all this, is coming up with things to talk about. And but we're at the 2 hour mark, so we're probably going to wrap it up pretty soon, unless anybody has anything else they want me to talk about tonight. I'll give you just a couple of seconds to get it typed out, and then we'll wrap it up. It's getting dark in here, and y'all won't even be able to see me here pretty soon. Okay. All right. Well, thank you to each and every one of you for coming in tonight. It's been a lot of fun. Hopefully, I'll see you at the trucking show. Logic Neo's here. Glad you could make it. Thank you, each and every one of you, for coming in, and we'll see you Thursday night. As I said, I'll have Joe Wentz and James here, and we'll see you then. All right. Good night, Logic. Y'all take care. Bye bye.